Hi, everyone. Sorry, I realized that there was a bit of a technical difficulty there, so you couldn't hear me. Just a very quick introduction again. Hi, everyone. My name is Marcus. I am from Society General. We are the product issuer of this product called Daily Leverage Certificates that's listed on SGX Securities Market. We launched it back in 2017, and it has been growing every year in terms of its adoption rate. And we partner with many brokers, including Tiger Brokers, to be able to come to you guys to share with you guys more about the stock market from a more trader's perspective, as well as more about the product, its features, as well as its risks that you can use as part of your overall portfolio. This is more of a tactical instrument that you can use to express your short-term view on the market. So I have two aims today. One is to share with you hopefully a more comprehensive digest of a summary of what has happened in the stock market in the last month, in this month itself, in February month to date. Last week was crazy in terms of the volatility, and I think this week is as well, judging from today's market action. But hopefully you're able to see which are the movers and shakers in the market through this sort of summary that I'm able to share with you on the Singapore and Hong Kong stock market. And my second aim also is to share with you more about DLCs, which is Daily Leverage Certificates, to see how this instrument works, its key product features, as well as its risks, so that you're able to have it as part of your arsenal, as your overall portfolio, to use it as a tactical instrument to express your short-term view, whether is it you're bullish on the market or you're bearish on the market. You are able to deploy these DLCs to meet your needs. Okay, so we have a lot of content to cover today. I will dive right into the market performance, but before that, let me just do a quick one. So in terms of disclaimers, the usual disclaimers, nothing in here should be considered as financial advice or investment, or any form of recommendation to buy or sell the DLCs. Any past performance does not reflect future performance, so please be aware of that. And also, investments in any of the securities or DLCs carry risks, and DLCs are for SIP qualified investors only. Okay, let's jump right into the Singapore stock market in February 2022. Okay, so I'm looking at the SIMSCI index. Okay, this is the MSCI Singapore index, which is one of the benchmark index of Singapore besides the FTSE STI. Okay, so the SIMSCI index is down minus 1.64% year to date, and in the month to date is down minus 0.87%, right? Last Friday it closed at 333 points level. Okay, so it's back to where you can say it's at the support level at 330 index level. You can see over here there is it sort of bounced off here 330 level back in the last quarter last year, and in early January or late December there was another bounce off here, and now we are back at this level at the 330 level again. So let's see whether this 330 level holds. All right, so this actually was quite we had a very strong run up in the month of January. I think that was in February, in the early February. So over here is 1st of February. It had a very strong run up. It went up quite a lot in the early February. I think this was in anticipation of all the earnings results that we saw in the last 2 weeks of all the prominent Singapore stocks, your bank stocks, as well as Capital Corp, etc. There was anticipation of positive results, and indeed, most of the prominent stocks that we know of did have positive results to share. And so you can see there was a very huge rally in terms of early February. But sadly enough, the last 2 weeks of the market was sort of it lost its gains due to the whole Russia-Ukraine crisis. So this is in line with the global markets as well, where a lot of the global indices benchmarks have fallen in the last 2 weeks. Okay, so that is the SIMSCI index for you. And look at some of the top gainers and losers in terms of the MSCI Singapore index constituent stocks. Okay, so CapitaLand was one of the top gainers over it. CapitaLand Integrated Commercial Trust and CapitaLand Investment Singapore, both of them registered a month-to-date gain of 9.3% and 7.8%. So it was a top performer in February, and they announced that they had the company swung to profit last year, and also mainly supported by its fund management and its lodging management business for this CapitaLand investment. Okay, and also one of the big one of the top gainers is Capital Corp over here. Capital Corp was one of the first to report their results this month. They announced that the net profit had surged past the 1 billion mark, and it was the highest recorded in the last 6 years, and they tripled their dividend and also announced a share buyback buyback plan. So there's these three. They're firing on all cylinders in terms of their results, positive results, triple their dividend, and also a share buyback plan. So I think they had registered quite a good gain as well. And month to date, they're up 5.5%. Okay, the three Singapore banks itself, DBS, UOB, and OCBC, had a very good start to the year, right? Even DBS was up, I think it was close to 15%, as high as in the first part of the year. And this was DBS even rose as high as $37.50 on Valentine's Day. It was up 15% since the start of the year. So it was a very good start for them. But sadly, however, they have lost almost half of its gains in the last 2 weeks because of the Ukraine-Russia crisis. But it's still up 7% in terms of its year-to-date performance. UOB is still up 13% year-to-date after shedding half of its year-to-date gains, similar to DBS. I think by terms of OCBC itself, they have lost all of its year-to-date gains in 2022 after the bank sort of reported its Q4 results missed expectations. All right, so that's the three Singapore banks. It was not so long ago that we saw quite a good rally in terms of the Singapore banks rallying hard in early February. But sadly, they have lost half or if not all of their gains in February month to date. Okay, and lastly, we have the palm oil stock, Wilmar. Wilmar is one of the top gainers as well. It registered a month to date gain of 4%, reported a 23% year-on-year increase in net income to 1.89 billion, which is its highest ever recorded revenue, net income, since its listing on SGX. Okay, so some of these are, so this is, we have come to the end or almost the end of the earnings season for the Singapore stocks. Most of them have reported positive results, but this has been sort of overshadowed by the Russia-Ukraine crisis. So it remains to be seen how investors will, react. Hopefully once this crisis dies down, with these strong results posted by the Singapore stocks, we'll see how the investors will react in terms of the market performance. Okay, and we're going on to the Hong Kong stock market recap right now for February. So let's look at the Hang Seng Index. Over here, the Hang Seng Index year-to-date gain is minus 2.6%. The February month-to-date gain is minus 4.25%. Okay, so similar to global indices, the Hang Seng Index also lost all of its gains that it has managed to generate in the first half in January, as well as the first half of February, and lost it in the past 2 weeks. The Hang Seng Index has crashed back down from $25,000 level, which it managed to reach in late January, early February, back down to where it was in terms of the lows over here in last November. It was back to its lows, and it's now around the 22,665 level again. So this is where the previous support was, and we'll see whether it manages to hold that 22,600 level as a support. Okay, the 10-day moving average, 20-day and 50-day moving average remains below the 10-day moving average, while the 10-day and 20-day moving average threatens to cross below the 50-day moving average. So the 50 moving average is this purple line. So the 10-day and 20 days is coming close back down to its 50-day moving average. So we'll see whether it crosses below that or not. Okay, so the Hang Seng Index has been beaten back down because of the Russian-Ukraine crisis. But I think it's also notable to note that the Hang Seng Index, there was a lot of ongoing concern in terms of its property debt crisis, in terms of the property market in China, as well as the China tech regulatory clampdown. They were still ongoing, and also there in February itself there was a refresh of that memories again when the China imposed some regulatory clampdowns on the food delivery platforms, which I'll go on in the next slide over here. Okay. Over here, in terms of the Hang Seng's top 5 gainers and losers in February month to date, like I said, the fears of new regulatory clampdown dampened investors' sentiment in February after China issued new guidelines asking for food delivery platforms to cut their fees, amidst the whole COVID crisis. So Meituan, one of the largest food delivery companies, platforms in China itself, tumbled the most in 7 months after the new guidelines. And month to date, the stock is down over here. Let's see, Meituan is down. Sorry, I'm blocking that. It's down minus 22%. You can see. So that is Meituan. It was the largest decliner in terms of the Hang Seng Index constituent stocks for this in this February month to date. There was also rumors that Tencent would be another one of them to receive another heavy blow from the regulatory side in the near future. This is a rumor that was circulating around. It was a very widely circulated rumor, and that has caused Tencent to also fall in the month of February. And this is despite the fact that Tencent's head of public relations officer came out to dispute the post about more regulatory clampdown on Tencent stock. But even despite that, Tencent shares remain under pressure. It is down to minus 10% month to date, and amongst one of the worst performers in amongst the Hang Seng constituent stocks over here. Okay, and also another tech giant, Alibaba. Alibaba's share price was under pressure after reports that China had ordered state-owned firms and banks to check their financial exposure, and other links to Alibaba's fintech arm, which is Ant Group. It didn't help either that Ant Alibaba reported results last week, and that missed analyst estimates. So Alibaba's shares have closed down below its previous low of 108 Hong Kong dollars to close at 105 Hong Kong dollars last week, right? Month to date, the stock is down minus 10% as of last Friday. So it's quite bearish sentiment in the Hong Kong stock market with the China property debt crisis, the Russian-Ukraine crisis, as well as fears of refreshed regulatory clampdowns by the China government on the tech sector. So there are a lot of headwinds that are facing the China-Hong Kong stock market. So this is something that I think you should be aware of as you dip your toes into the China-Hong Kong stock market. But I mean, there are a lot of volatility, and that could present some opportunities for people who may have a short-term view of the market. Okay, on a more positive note, I think you can see that Budweiser and BYD were among the top gainers in the Hang Seng constituent stock. Budweiser reported very positive results that beat estimates, BYD as well. So Budweiser boosted their dividends, as Q4 revenue jumped 17% to 1.34 billion, right, Hong Kong dollars. Okay. And also, we also wanted to share that, Hong Kong Exchange was one of the top losers within the Hang Seng constituent stocks. You can see that Hong Kong Exchange posted the worst quarterly profit in 2 years as China tightened scrutiny on offshore listings and widened its crackdown. So that affected, the number of listings on Hong Kong Exchange, and also general sentiment of the China tech sector caused people to stay away from all these China tech stocks that are listed on the Hong Kong Exchange. So they posted one of their worst quarterly profit. We'll see whether any recovery can come in. It's worth also noting that on a small positive note that China has earlier in January committed that they will help to boost the market with some monetary policy easing, and a lot of analysts are also expecting China to have more monetary policy easing in the coming months. So we'll see how that plays out. Okay, so that is the Hong Kong and stock market recap. I just wanted to share with you a quick some DLC activities, some activities on the daily leverage certificates in the past week, given that it was very volatile week last week, the week of 21st to 25th Feb. Okay, so these are some of the top gainers and losers of the DLCs. We saw that the top gainer is our SENS 5 times short. Okay, wait, just a very quick recap for those or summary for those who are not clear what DLCs are. So the daily leverage certificates are listed on SGX Securities Market and is issued by us, Society Generale. We are the issuer and designated market maker of these products that are listed on SGX Securities Market. It offers 5 times exposure to the underlying stock, whether is it long or short direction, so that you can also trade both sides of the market. Okay, so that is a product that's listed on SGX Securities Market. These DLCs over here, okay, so SENS 5 times short China, SENS 5 times short DLCs was the top gainer in the week of 21st to 25th Feb. It registered a gain of plus 74% because the underlying stock was down minus 12%. Okay, so this top code DZEW was the top gainer. This was on the back of on a broad market sell-off, of course, but also some of the gainers, the top gainers and top losers were affected by company-specific news that affected them even more in this broad market sell-off, right? Okay, so the sense China fell even more as it fell 12% in last week. It fell even more than the broader market because the Chinese government sort of it seems that they're unlikely to open travel tours to Macau after the recent surge in COVID cases in Hong Kong and Shenzhen, right? So there are people fear that they might not, Hong Kong government and the China government will not open the travel related tours to Macau. So the kind of tourism and hospitality will be affected. Okay, we can also see that one of the top gainers is Alibaba short DLC, DCIW. It is up 72%. Okay, so this Alibaba gained 72% in last week itself when Alibaba stock was down minus 12%. So if the underlying stock is down, the short DLC will gain in value while the long DLC will fall in value. All right, maybe I didn't mention that just now. So therefore, you can see that's why the DLC price has gained over here. Alibaba has gained 72%, while the underlying stock is down. All right, so Alibaba again, I believe that was because of it missed the estimates in terms of their results announcement, therefore causing a sharper drop in the Alibaba stock versus the broader market. OCBC as well, company specific news, they announced results that missed estimates. Therefore, it also fell more than the broader market over here. OCBC was down minus 11% last week and therefore gained 65% on the DLC. All right. And the top losers over here, okay, we can see similarly, they have it's the same view. The long DLC will lose in value when the underlying stock falls, but will gain in value when the underlying stock rises, right? So similarly, OCBC Sense, Alibaba were among the top losers as well when they fell because the underlying stock fell as well. Okay, so looking at over here, for those who are not too clear about what DLCs are, I'll explain a bit more later in my presentation. But also you can see over here, these are 5 times leverage instruments, right? But you can see over here, it seems like some of you who are sharp, you might notice that, the Sense is down minus 12%, but times 5 of that is minus 60%, right? How come or plus 60% for the short DLC, right? How come the DZEW Sense China DLC, short DLC is up by 74%, right? That's more than 60%. And how come the Sense China long DLC, DKTW, is down by minus 49%, right? Not minus 60%, right? Times 5. So those are sharp enough, good catch. This is due to the compounding effect of the DLC. This is a span of 1 week. Okay, so the 5 times performance is based on a close-to-close basis. But over 1 week, the leverage factor could change. You could gain extra leverage because of the compounding effect, which I'll also touch on later over there. But let's move on to the fund flows for the DLCs. So these are some of the fund flows. So this is what investors are buying or selling on the DLCs in the past week, just to give you a bit of a view of, of what people are looking at and also, where they're putting their money at, right? And you can find these fund flows on our DLC website, dlc.socialgen.com as well. You can see over here in terms of the long DLCs, the top net inflows into the DLCs, the underlyings would be the UOB DLCs, the long DLCs, OCBC long DLCs, as well as the Hang Seng long DLCs, right? These top 5 over there. So it shows what this means is that people are buying into the UOB long DLCs, OCBC long DLCs, because they have a bullish view of the underlying stock, right? So I think all these took quite a dip last week, and we saw a lot of buyers coming in to buy the dip. It's important to note that this is only a sort of a period of the one whole week. These investors could be, trading it intraday. They could be trading it, for a few days, or they could be holding it. It's not representative of what kind of holding period these people are having. It just shows that they are interested in this underlyings, and they have more of a bullish view because they buy the long DLCs, right? And also on the long DLCs, you can see some people are taking profit, right? Or maybe cutting loss or just selling the DLCs back to the issuer. On these few underlyings over here, the SGX underlying, Singtel, and DBS underlyings. So they are selling back the long DLCs on these underlyings back to the issuer. Okay. And on the short DLCs, right, you can see who are buying the short DLCs over here. You can see that people are buying the Kuaishou DLCs as well as the Sipsky MSCI Singapore DLCs, which means that they have a bearish view of the underlying stock, right? They buy the short Kuaishou DLCs and the short Sipsky DLCs to express their short-term view, bearish view of these underlying over here in the past week. And similarly, they you can see on the short DLCs, those that have the net outflow of funds. This one, I think prominently a notable one would be Geely. It had a net outflow of minus 470k, minus 475k on the short DLC. So that means that someone is, or a few people are selling back, the investors are selling back the short DLCs back to the issuer. Okay, so that could be meaning that they may have taken profit or they're cutting loss, but they are selling the short DLCs back to the issuer for these Geely DLCs, short DLCs. All right, so that's a bit of how do you read this fund flow chart. If you have any more questions, we can always drop us a line on our hotline, DLC hotline, to understand more about what are these tools on our DLC website that can help you to gain more insights into the DLC activities. All right, so that is the fund flow on the DLCs. That is a quick recap of DLC activities as well. I want to move on into the this is one of the constituent changes on the index, which I wanted to just share with everyone. So there was the quarterly review of the major indices, benchmark indices, in February. And then they have announced, what are the changes that will take effect. So this is something might be interesting to investors out there. For the Hang Seng Index, they are increasing the number of constituents from 64 to 66 constituent stocks in the index. So they've included over here Lenovo 992. They've included Nongfu Spring 9633 as well. So when you have positive inclusion into the index, generally there's a bit of a positive sentiment around these stocks, because people might think that there could be funds who are passive funds who will buy into the index, would have to buy these stocks once they're included in the benchmark index as well. Okay, and Hang Seng China Enterprises Index, this one, the constituent stocks remains unchanged at 50. But they have included Xingyi Solar. This is a solar panel sort of company riding on the whole green energy wave, 968 Hong Kong. And then also they have removed Evergrande. All right, Evergrande, yeah. And on the Hang Seng Tech Index, constituents remain unchanged at 30, and they have included SenseTime, Li Auto, and XPeng. Okay, so generally, yes, these are some of the Li Auto and XPeng are some of the EV plays that have been quite popular. There was also news that NIO is pursuing a secondary listing on Hong Kong Exchange that could come in as early as in March. So that's NIO. So then you will have the Li Auto, XPeng, as well as NIO, 3 EV plays that could be that you can actually trade on Hong Kong Exchange. Okay, and removal of these ones would be Tongzheng Travel, Weimob, and also Auto Home. Okay, these will take effect on 7th of March, Monday. So do take note if you are sort of looking at these underlying stocks that could have more volatility as it goes towards the effective date of these changes, right? And on the Singapore side, just a quick highlight. So yes, C Limited is it is already a constituent stock of the MSCI Singapore Index, and it has been gradually included in the index in phases, phase 1, phase 2, and phase 3. We are at the final stage of the phase 3 right now, where you include 100% of C Limited. So I think once it's included 100% in this MSCI Singapore Index, you could see its constituent weightage to be around, I would think, 15 to 20% of the constituent of the index composition. So that is actually quite a sizable amount of the index, and it could have its movements could have a material impact on the MSCI Singapore Index performance. All right, so please take note of that. The C Limited is going to be completing its full inclusion into the MSCI Singapore Index. Okay, so I've come to the end of my first part, which I wanted to share with you some insights on the market. And now I would like to just take the last 15 minutes to just give you a very quick introduction to the DLCs that is listed on SGX Securities Market. So as mentioned just now, you saw the performance, Alibaba is down 10, 12%, and the DLC is up by 60%, 70%, right? So these are leverage trading instrument, which means that you can enhance your performance of rather than buying the stock itself. But also, it is meant for short-term trading. It is not meant for you to buy and hold these DLCs for a long period of time. So we see day traders, we see swing traders, but generally the holding period is between intraday to up to 2 weeks. Okay, so please do not hold these DLCs for the long term. All right, and this how does this DLCs work? It gives you a fixed daily leverage of 5 or 7 times on the underlying stock. Every single underlying stock will have a daily long DLC and also a daily short DLC, right? So it's a long DLC and a short DLC. If you are bullish on the underlying stock, you buy the long DLC, and if you are bearish on the underlying stock, you buy the short DLC to be able to profit from the underlying move. Okay, as I mentioned, so it's 5 times and 7 times leverage. For the single stocks, it's only capped at 5 times leverage. But for our index underlyings like the Hang Seng Index, as well as the MSCI Singapore Index, it can go up to 7 times leverage. Okay, so the DLCs will move in line with the underlying asset, on a close-to-close basis with that 7 times or 5 times performance every day on a close-to-close basis. Okay, it is traded on SGX securities market, as I mentioned just now. So it is, you can trade it through a regular stock brokerage account. You can trade it through Tiger Brokers. If you search for the stock code, you can find it on your Tiger trading platform. And you can trade it just like a stock, right? There is no need to open a separate account. It is not a margin product. You just put in your money into your trading account and you buy it the same way that you would buy stocks. All right, but it is only for SIP qualified investors. Okay, and I mentioned just now, SocGen is the issuer and the designated market maker of these DLCs. What it means is that we issue these products unlisted on SGX securities market, and we are also the market maker for these instruments. We are there to provide liquidity for the DLCs during SGX trading hours. And it's continuous quotations, so that you will not have fear of that I can't buy or can't sell it. You will always be there to provide liquidity for investors to buy and sell the DLCs. All right. So the DLCs I mentioned just now, we've launched it in 2017. We started off with 10 DLCs only back then on the key Asian indices, but now we've expanded to single stocks, and we are now close to 250 DLCs listed on SGX securities market that is issued by SocGen. And coming up very soon, we've just launched the DLCs on S&P 500 index, the long and short 5 times leverage on the S&P 500 index. So this is launched last week, and we are going to list it. It's going to start trading this Friday on the 4th of March. All right. So that allows you to take a 5 times leverage exposure to the S&P 500 index during Asian hours. Okay. So we have expanded the underlying, and we continue to really expand to be able to give investors a wide range of choice in terms of which underlying asset, whether index or single stock that they want to gain exposure to. So far on the Hong Kong side, we have 3 indices, Hang Seng Index, Hang Seng China Enterprises Index, and the Hang Seng Tech Index as well. And we cover over 50 stocks right now on the Hong Kong, that's listed on the Hong Kong Exchange. So that ranges from your tech giants, your Tencent, Alibaba, and down to also some of the old economy plays like your bank stocks, HSBC, CCB, Petrol China, and China Mobile. So there's a wide range of Hong Kong stocks that you can choose from. On the Singapore side, we have it on the MSCI Singapore Index, and we are looking to also, to do the DLCs on the Straits Times Index. We have over 15 we cover over 15 underlying stocks as well. You have your DBS, OCBC, UOB, all the prominent blue chip names that is part of the constituent stocks of the STI as well as the MSCI Singapore. We do have them as well. But if you find that you want to have a DLCs on certain underlyings, or you think that you want to have leverage exposure to one of these underlying stocks on Hong Kong or Singapore that you are interested to trade DLCs on, please feel free to also share your feedback with us, and we can also launch the DLCs on them. Okay, the basic features of how DLCs work, I mentioned just now, provides you with 5 times leverage exposure on the underlying stocks on a close-to-close basis, right? So how does it work? Simply put, if DBS stock is up by 2%, today from yesterday's close, that means it's up it's now at $25.50. I mean, this is quite an outdated slide. I know DBS is way more than that right now, but if DBS is up by 2% today from yesterday's close, the DLC would be 5 times of that performance, right? It'll be up by 10% from yesterday's close as well. Over here, the 5 times long DBS DLC will be up by 10%, while the short DBS DLC will be down by 10%. Okay, So, if DBS was instead down by 2% from yesterday's close, then your short DBS DLC will be up by 10%, while your long DBS DLC will be down by 10%. Okay, this happens every day on a coast-to-coast basis. The DLCs provide you with that 5 times leverage exposure. Okay, this is an example of our terms page on our website, our DLC website, where you can find all the DLCs as well as all the product terms of each of the DLC. Over here, you're looking at the DIHW, the 10-cent long DBS, not 10-cent long DLC. So an example over here was back in Jan 2022. 10-cent was up by 1.54% during the day, and you can see that the 10-cent long DLC was up by 9.76%, trading at about $1.50. Okay, so every day this DLC 10-cent long DLC will move by approximately 5 times that of the underlying stock's performance. Okay, over here also you can see that the 10-cent short, the 5-time short 10-cent DLC DTCW is down by approximately 5% as well, 5 times that of the underlying stock. Because 10-cent was up by 1.5%, so the 10-cent short DLC fell in terms of its value by about 6%. Okay. So, like I mentioned just now, the DLCs can be used for you to express your short-term view. So we do see investors using it for day trading. Okay, some of the stocks are quite volatile. As you can see, some of them move like 3%, 4% or 5% a day, and times 5 of that will be 25% a day. So there is definitely a wide range of movement for day traders to be able to profit or generate their gains during the day. So we do see investors use the DLCs for day trading. For people who have a bit more of a longer term view, they do have swing trading. So that's where they will hold the DLCs for a few days or even a few weeks. Okay, and also we see investors using these DLCs because there is a short DLC, which will gain in value when underlying stock drops. We do see investors using the DLCs for their hedging needs as well. You own a whole portfolio of 10-cent stocks that you don't want to sell. You're going to hold for life. So that is your investment portfolio. You're going to hold it for the long term because you believe in 10-cent. But in the short term, with the current climate, you see that the China regulatory clampdown is just getting worse. If you see that it's getting worse and you believe that it's going to get worse, you could use the short 10-cent DLC to hedge some of your portfolio losses, because they'll use the short 10-cent DLCs will gain in value if 10-cent stock falls. All right. So here are some examples over here in terms of day trading. The Meituan 5 times long DLC DZHW versus the Meituan stock itself. So Meituan rose 2.6% within the day on 25th June, one of these days, in 2021. It rose by 2.6%, and you can see that the Meituan long DLC DZHW also rose in value, and it rose by 14.5% during the same period intraday. Okay, so that's where you can see you can actually make some sizable gains using the DLCs if you trade intraday also. And in terms of swing trading, if you hold this for a period of 25th Feb to 30th April, so that's maybe about 2 weeks, about a month of a swing trade. Okay, you see UOB was up by 9% from 25th Feb to 30th April last year. The DLC DDWW, that is the UOB long DLC. During the same period, the DDWW also rose in value by 48%. So 9% times 5 is 45%, right? So it's close to that. It is up by 48% during the same period as well, if you hold it for that approximately 1 month of holding period. And hedging, I mentioned just now, 10-cent fell in period of 2nd July to 28th July. It fell by 24%, 10-cent. And you can see that the 10-cent short DLC DMIW back then, during that 1 month period, it gained 209%. So that's where your some of the gains from holding a short 10-cent DLC could offset some of the losses that you are facing on your 10-cent investment portfolio. All right. So that is some of the use cases of DLCs. We think that DLCs is an ideal instrument that you can use to access the Hong Kong market. And these DLCs are listed on the HX Securities market. So you can get Hong Kong market exposure here, very much here on HX Securities market through your local stock brokerage account. You don't have to go and buy the Hong Kong stock itself and gain, and because that comes with it, some of the risks in terms of investing overseas in a Hong Kong exchange in a foreign market, as well as some of the FX risks, right? Most of all the DLCs are traded in SGD, is denominated in SGD, so you don't have to change your money to Hong Kong dollars to go and buy the Hong Kong stock. If you want to gain exposure to some of the Hong Kong stocks like Tencent, you just need to buy the the Tencent DLCs using your SGD currency, right? It is tradable through your regular stock brokerage account. And I think the most compelling sort of proposition for the DLCs will be, in terms of its lower capital outlay and therefore also lower fees that you pay versus buying the stock on the Hong Kong exchange itself, right? So you can see just now some of the Tencent DLCs or some of the DLCs, they are generally listed price below $2. They range from 20 cents to $1 plus in terms of the DLC price. So if you buy the DLC, you're getting the exposure to Tencent stock itself. But if you go and buy the Tencent stock itself on Hong Kong exchange, generally your capital outlay is at minimum 8K or 10K Singapore dollars for you to be able to gain exposure to Tencent because of the minimum lot size on the Tencent stock. So you have to put in at least 8K or 10K Singapore dollars to gain exposure to Tencent. But then if you buy the DLC instead, you can do it in bite-sized amounts. If the DLC is priced at $1, the minimum lot size is 100 certificates, which means 100 times $1 is $100. You can gain exposure to Tencent with as little as $100. But of course, you should take into account some of the broker commissions they are paying. But essentially, you could go into Tencent in bite sizes of a few $100s each time, right? In this example, you can see over here. So that allows you to, in a sense, minimize your risk a bit, but you don't have to go all in. 8K, 10K into Tencent stock directly in just one trade. You could break it up and you can say dollar cost average into the Tencent stock as well. And also with this lower capital that you use, a few $100s to gain that same exposure to Tencent stock, you are paying lower fees because you are using less capital to gain the same exposure to Hong Kong stocks. You are paying lower fees in terms of your broker commission as well as your exchange fees that you pay, right? To gain exposure to Tencent stock. Therefore, we think that the DLCs offer quite a strong proposition if you are looking to trade the Hong Kong stocks on a short-term basis. Also because Hong Kong the fees are quite high with their exchange fees. But if you trade at DLCs, you are only paying the Singapore fees on SGX securities market. Okay, so do consider the DLCs if you're looking to gain access to the Hong Kong underlyings in the short term. Okay, I mentioned this very important feature of the DLCs just now. Why you saw that more than 5 times performance. Alibaba was down by 12%, but the short DLC was up by 70% or more than 60%, more than 5 times that of the underlying stock. That's because of the compounding effect, right? Okay, and it's best to just show you in a very simple example over here. You see over here the underlying asset over here is up by 1%, up by 2%, and up by another 2% in 3 consecutive days, right? On day 1, it's up by 1%, day 2 is up by 2%, and day 3 is up by another 2%. That gives you the overall gain of plus 5% across the 3 days, right? But then over here on the DLCs, every day you get that 5% every day, 1%, 5%, 2%, 10%, 2%, 10%, right? But the overall return you can see over here is 27%, right? So 5 times 5% is 25%, but over here it's up by 27%. So where did that 2% come from, right? The additional 2%, where they come from, this is because the gains are locked in every day. The gains and losses of the DLC is locked in every day. Over here it's up by 5%, so it closed at $2.63 on day 1. Then on day 2, it's up by 10% again, and 10% is based off this $2.63. So every day your gains and losses are locked in, and the gains next day is based off a higher base. That makes it compound the gain and the losses as well. If you are able to spot a nice trending market, this compounding effect can work for you, right? In a strong trending market, you would be able to gain more than that 5 times performance if you are holding the right direction. But if you are not holding the right direction in a trending market, you will also lose less than that 5 times sort of amount, right? You saw just now over in the earlier slides, the Alibaba long DLC also. Alibaba is down by 12%, but the Alibaba short long DLC is up by less than, it's down by less than 60%, right? It was down by, I think, close to 50%. So, in a strong trading market, the compounding effect can work for you. But just a caution that the compounding effect can work for you or against you. It work against you in a volatile market. If the stock is up and down, then yes, you will have that. You will see that it will give you less than that 5 times performance. Okay, even if you get the direction correct. So over here, you can see this example over here. The underlying is up by 2%, down by 4%, and then up by 7% for the 3 consecutive days, right? So at the end of the third day, it is up by 5% also. Overall return of the underlying is 5% if you bought the stock, right? But if you bought the DLC, it is up by 10% on the day one, up by 20%, down by 20% on day two, and then up by 37% on day three, right? So in the end, your return is only plus 20%, right? So 5 times 5, 25%. How come my DLC is only give me a gain of 20%? That's because, again, every day your losses and gains are locked in. All right. So therefore, it gives you less than that 5 times performance across the 3 days. Okay, but if you're an intraday trader, one day itself, you're trading within the day itself, that 5 times performance, it is on a close-to-close basis. So you'll be able to see exactly that 5 times performance. Okay, the 5 times performance will deviate if you hold more than a day. Okay, especially if you hold it for a long period of time, then you will see that the performance will definitely not be the 5 times that you expect. All right. So compounding effect is a very important feature of these DLCs. If you are holding it for a few days or even for a few weeks, the compounding effect is something that you must understand, and it can work for you in a strong trending market, but it can work against you in a volatile market. Okay. Some examples which I will not go into. In my last few minutes, I just wanted to show you guys just a preview of our website, dlc.socgen.com. You'll be able to find all the resources you need to learn more about the DLCs over here on dlc.socgen.com. You can find, this is our homepage over here. If you go log on, you'll be able to see that. And we will show you some of the insights that I shared just now, the top gainers and top losers of the DLC, the farm flow activities. You can find educational information under our education tab over here. You include a brochure as well as just a write-up about what the DLCs, how do they work, and also the features that you should take note of. All right. And how to find a DLC on, SocGen's website. You can look for the underline. You can select the underline that you want, which will display all the DLCs. You can choose whether you want a long DLC or a short DLC under the type. And okay, you also can choose the leverage factor, which will vary for the index underlyings, right? To find it on your broker platform, if you go to Tiger Broker's platform, you can just search for the stock code. You will be able to find the DLCs there as well. Okay, so you can try out like this, and you search for Hang Seng Tech Index, there's underlying, and then you'll be able to see all the DLCs that come up, both the long and the short DLCs. So how you choose a DLC, if you are bullish on the underlying stock, you're bullish on DBS stock, you look at the 5 times long DBS DLC. If you're bearish, you would choose the 5 times short DBS DLC over here, right? You will look at their price levels. Okay, so these are all good price ranges. 20 cents to $1 plus is a good price range. If you see some of them at like 1 cent or 2 cents, or you see them at $5 or $10, those are ideally not a good price range. Okay, and also you look at the spread. Generally the spread, is it a good spread or not spread? Or is it a wide spread or is it a tight spread? Just make sure that it's around a 1% spread, 1 to 2% spread will be a very decent spread for these DLCs. And also, the sensitivity is another thing that you should look at over here. So this is how many how much must the underlying stock move for the DLC to move one tick, right? For it to move one minimum bid size. So over here, the DBS must move by 3 cents, approximately 3 cents, for the DBS long DLC to move by 1 minimum bid size. Outstanding quantity over here, make sure that it's not at 100% or 90+% or 80%. Generally, this is how much we have in how much people have bought in the from the issuer. So if we are sold out on the DLCs for this particular DLC over there, it will reflect that it's 100% outstanding quantity, which means that we will not sell anymore. The SocGen will not sell any more of these DLCs, but we will always put the bid there for people to sell back to us. All right. And the price matrix is a very, very useful tool for those who want to see how the underlying stock or how the DLC will move in line with the underlying stock, right? If the underlying stock moves by a few index points or DBS moves by 20 cents, how much will the DLC move? right? So we have this price matrix that's available on our website for you to see how does the DLC price $1.10 or $1.50 move in line with the DBS stock that is priced at $25. So principally, it will move by 5 times of that on a close-to-close basis. If DBS is up by 1%, the DBS long DLC will move by 5%. But this price matrix helps you to see it on a more price level, on a more minute price level. So you can see exactly how much for the DLC will move for every 20 cents move or every 10-cent move on the DBS stock, for example. Okay, that's a price matrix that's available on our website. You can find it in the terms page. At the top, you should see price matrix over there. Cost and fees also is we hope to be transparent with investors on the cost and fees. So this is displayed on our website every day. You can see over here under the cost and fees, under individual terms fees of the DLCs, you can see the cost and fees that is published every day over here. So this is leverage trading instruments. Leverage instruments, so there's always a funding cost, overnight funding cost, similar to all leverage products out there. So you'll be charged on a funding cost on the DLC if you hold overnight. Generally, if you hold it for a few days, the funding cost is really quite negligible. But if you hold it for a few months or even up to a year, the funding cost can come up to a sizable amount. So I reiterate again that these DLCs are for short-term trading needs only. All right. And we have a markets tab under our website. This is where you can find a lot of information, interesting information on the underlying stocks as well as the DLCs. You can look at the underlying stock charts where you can make your annotations. You can see the fund flows, which I also shared just now on the DLCs, the long short ratio of the DLCs as well. What's the composition of people holding on to the long DLCs versus the short DLCs, and also some of the underlying stock fund flows on SGX stock fund flows, as well as on the Hong Kong Exchange Southbound Connect stock fund flows that is nicely displayed for you guys to see which are the top, most traded stocks on the Southbound Connect, right? So I think that's all I have in this 50 minutes of sharing that I have for everyone. So I thank everyone for being here with me to listen to me share a bit more about the market, as well as introduce the DLCs to you guys. If there's anything, please again give us a call or write in to us. Our hotline is over here on the top of the website. Our website, dlc.socialgen.com. You can call our hotline here, or you can also contact us by writing us, dropping us an email. There is an email address at the top as well of this website for you to contact us. All right. So I think that's it. And hopefully I'll see you guys again in our March monthly update on the Singapore and Hong Kong stock market. All right. Thank you, everyone.